Welcome to another episode of FIRSTALK podcast by IDFC First Private. Today we're going to talk about something that is of interest to each one of us. Is investing a science or is it an art? And my answer to that is that even if it is a science, it is still an art. I'd like to welcome Saurabh Mukherjea, the founder of Marcellus Investment Managers, on our show. Welcome, Saurabh.
Thank you very much. Thank you.
Apart from being a CIO and founder of Marcellus, Saurabh is also a renowned author. He has 6 books to his credit. 6 books, right?
That's right,
Saurabh?
6 as of now.
And your 6th one is just come out.
Yeah.
Behold The Leviathan.
Absolutely.
Right? Why don't we start with you telling us something about this book, Saurabh?
Look, it's been a long time since I wrote anything about the country, and it's been 16 years in India. So I thought it was high time that my colleagues and I opined on the changes in our country. So Behold The Leviathan, the unusual rise of modern India, is about the changes that have taken place in the country, why we should all be excited about that, and how as investors we can profit from that. Thankfully, the book's done really well. It was published 10 days ago and it's already a national bestseller.
Great, super. So we'll come back to Behold The Leviathan. Let's start with one of your first books and one of my favorites that I've read, and I really loved it because it talks about some of the concepts of investing, something that everybody can actually relate to. Coffee can investing, right? So while I've read it, and I'm sure many of our listeners and viewers have also read the book, but for the uninitiated, do you want to start with telling us about the concept of coffee can?
Sure.
Because I find it very interesting, but why don't you elaborate on the concept of coffee can investing?
So I think 11 or 12 years ago, I was having dinner with some of my investor friends, and my friend Sanjay Bhattacharya, he told me that there's a guy called Rob Kirby. He's written this paper called Coffee Can Investing.
Yeah.
And over dinner, I still remember that dinner was at the St. Regis. I think the St. Regis was called something else in that era. But over dinner at the Indian restaurant St. Regis, Sanjay explained to me that what Rob Kirby says is, if you buy a bunch of really high quality stocks and you hold them for a long period of time, say a decade, you end up making unbelievable amounts of wealth. Now, even though I was the CEO of a large broking firm then, I found it a little hard to believe. How can it be that I buy a bunch of high quality stocks and मैं कुछ भी ना करूँ, I let it be for a decade, मैं अमीर बन जाऊँगा. But on the way home on the taxi, I remember I took a Kali Pili home and I Googled it and the PDF comes up, and anybody who wants to read it, just go into Google and say Rob Kirby Coffee Can Investing and the paper comes up. And it's a 4-page PDF. It's probably the best 4 pages of investing literature I ever read. And he explained in that paper that in the American Wild West, जब banks नहीं होते थे, what Americans would do is they would take a bunch of their savings, stick it in a coffee can, and put it under the pillow. And that's how the concept came about. Rob used to be a racing car driver. He became a fund manager in the late 60s. And he started investing for this couple in Los Angeles. Somewhere in the early 70s, one of his lady clients came and said, Rob, my husband has passed away. And after Rob had commiserated, this lady said, you know what, I want you to manage the money he's left behind. So for 5 minutes roughly, Rob Kirby was thrilled that this lady in her hour of need, वो किसके बारे में सोच रही है, मेरे बारे में सोच रही है, कितना बड़ा honor है मेरे लिए. But then when he opened the husband's portfolio, he realized that the husband had outperformed him. Rob Kirby, the celebrated fund manager, had been outperformed by the deceased husband by an order of magnitude. And the reason he realized was what the husband would do is buy a good company.
He wouldn't take his advice.
And wouldn't take his advice. When Rob would buy, the husband would buy. But when Rob would sell, the husband wouldn't sell. And through that medium, the deceased man outperformed Rob Kirby by an order of magnitude. So ये करीबन 1974, Rob Kirby को ये insight मिला. In 84, he published this chota sa but incredible paper. So I said, let's try this in India. So 2015, I first ran the simulations. And I was just amazed as to how powerful it was. It became a book called Unusual Billionaires in 2016. And then we sharpened it a little further. In 2018, Coffee Can Investing came out. And I think that was the first time someone in India had said there's a simple way to buy a bunch of high quality names. And then if you let them be, you let them rip, let time do its magic, you will get rich. And, even with the benefit of hindsight, I still remember the excitement that we felt when the numbers came through. And to this day, it's now been translated into Gujarati, into Marathi.
Wow.
And the pirated versions also are wildly popular. So I think, we've made a small impact in the vast arena of Indian investing. But all credit to Rob Kirby. My only regret is the great man passed away before I could
meet him in person.
Yeah, before I could even send him a copy of the book. I've referenced him in Unusual Billionaires, but I then called up. I know some of the people who worked in the same firm, but by the time I got around to talking to them, the great man had passed away. But a remarkable man, simple paper, great concept, changes lives.
Phenomenal, yeah. So, see, one of the principles that coffee can investing touches upon is long-term investing. Like you said, that the person whom Kirby was referring to took his advice in buying the stocks, but never took his advice in selling them, and just kind of held on to those stocks. And those stocks, that portfolio really outperformed what Kirby was advising, right? And you say that, while that's a generic statement to make, saying long-term. We all, when we talk to customers and investors, we say that stay put for long-term, buy and hold. But you really put out that as a principle, saying that your bare minimum horizon should be 10 years or more, right? Basically long-term, 10 years or more is long-term, right? And let's say when you spoke about 10, 12 years back when this concept emerged in your head, and you love cricket analogy. In a lot of your books, you mentioned that. Test cricket used to be the most loved form of cricket. That's also migrated to now T20, which is instant.
Yeah,
you walk
lovely.
into a stadium, a couple of
Beautiful,
hours,
yeah.
you're out.
So let me talk about it first using the cricket example as to why short term is destructive.
You're not a fan of T20?
So I was going to reference IDFC because you guys sponsored the recent test series. and I think there's a very telling message there, right? I think I saw it happen to England 2 years ago when they won the T20 World Cup.
Yeah.
So after winning the T20 World Cup, England felt that हर चीज में हम T20 करेंगे. So they called it baseball. And ever since they started playing baseball, I don't think they've beaten a team of note. Right? And it's happened to us as well. We won the T20 World Cup.
Yeah.
We said अब हर जगह हम T20 करेंगे. It worked against Bangladesh, but the Kiwis tore us apart, right? And if you watch the recent test series, which you guys I think sponsored, and kudos to IDFC for sponsoring test cricket. If you notice what happened, right? Wherever our players would lose their patience and try to do chakka chauka and fatafat get results, they would lose a wicket. And New Zealand ended up winning 3-0, right? It's an unprecedented result. I think at the core of it, first time we got whitewashed, right? And at the core of it is impatience. Impatience because अभी तो हम जीत के आए ना T20, धड़ाधड़ मार के जीत के आ गए. टेस्ट क्रिकेट में भी करेंगे, but टेस्ट क्रिकेट rewards patience, right? Which is why Rahul Dravid remains my all-time favorite sports person. Now, let's come to investing. Right, investing में as well, as you are highlighting, every day the market's saying, this is your wealth, ये आपकी portfolio है, देखिए नाचिए. And the more you let your brain rip on that data, the more self-damage you do. I do as well. The more I let my brain rip on share price data, the more self-damage you do, right? What Coffee Can Investing is giving you is a simple mental model to say, आप डालिए, fill it, shut it, and let it rip. Forget it so that your brain doesn't damage your own portfolio. Things will go up, things will go down. Now, there's a basic mathematical rule behind it. It took me a while to understand this basic mathematical rule. मैं सबसे simple तरीके से समझाता हूँ. So, assume you only have 2 stocks in your portfolio. Okay. And दोनों में आपने assume you put 50-50. 50 rupees in stock A, 50 rupees in stock B. Then मानिए stock A goes to zero रातों रात. Right? Half your wealth gets wiped out. The tendency will be to panic and sell stock B as well. अगर आपने कर दिया तो 100 रुपये आपके at most 50 बने, minus 50% return आ गया, ठीक है? But if you let it be, you lost your money on stock B, right? You lost half your money on stock A, I'm sorry, पहला stock 0 हो गया. Correct. If you let the other stock rip, right? And assume that it does 10x in 10 years, right? And if you let it rip, if you bought a good stock, there's a high chance it will do 10x in 10 years. So 50 का 500 हो जाएगा. You started with 100 rupees, you lost half of it, but the other half became 500. 100 becoming 500 in 10 years is 18%. So if you met someone a decade later and said, तेरी return कितनी आई, and you say 18%, the guy will say, but तेरा आधा portfolio तो उड़ गया था. And you say, हाँ उड़ गया था, but the way long-term compounding works is what works for you more than makes up for what you destroy. But if you put yourself in the shoes of that portfolio manager that had A and B, अगर उसका एक फट जाए, naturally panic will take hold. He'll sell the other one as well, and he'll give a client a minus 50% return, right? That's the difference. If you let your brain apply, work day to day, you'll be trading on US election result, Maharashtra assembly results, latest test cricket results पे भी शायद आप trade कर लोगे. And usually that will enrich your broker. And all credit to the founders at Zerodha. They've been very generous in telling the world how rich they've become on the on the back of Indians trading relentlessly. But you'll be enriching a broker by lots of trading. शायद आपको थोड़ा मज़ा भी आ जाएगा, entertainment प्राप्त हो जाएगी, but पैसे खास बनेंगे नहीं.
Yeah. You know, they say about the 2007 subprime lending crisis, and I'm sure you were a market participant at that time also. Equity investors who made money, you know, because there was a lot of panic selling. I'm sure you remember in 2007 when the markets really hit rock bottom across the globe in India. There's a lot of panic selling that a lot of people did. Probably the only people who ended up not kind of selling in panic and making losses were the ones who were invested in locked-in equity products.
Right.
Obviously, nobody likes locked-in equity products because we feel that, you know, they don't give you the flexibility to move out when you want to. But that was a period when, you know, some of those products where people didn't have an option to move out, but eventually when the markets returned back to sanity and, you know, started making some money for investors, those are people who, you know, realized that staying invested, whichever way, it was not the best way of staying invested because it's locked in product, but they made money. They didn't suffer losses like people who kind of panic sold and, you know, exited.
Nicely put. And if you think about it, right, real estate in our country, whilst it's a weak asset in terms of long-term compounding, the only reason a whole bunch of Indian families end up making money from real estate is because itna cost, transaction cost hai, capital gains taxes hai. Most families take a long-term view on real estate, and in a way, good that they do because kuch paisa ban jata hai. Real estate forces you to be locked in for 10, 20, 30 saal, and the passage of time makes you rich. I keep asking myself if Indian families could buy and sell flats at every dip of the real estate market.
In exchange for real estate.
So I'm quite glad that in a way, real estate, because of high transaction costs, gives every Indian family a chance to do coffee can investing, albeit with a chota sa compounding engine rather than a bada compounding.
We'll talk about real estate because that is a favorite subject of your and mine, right? So another principle which I firmly believe that should be one of the most fundamental principles of investing for everybody. And you mentioned about corporate governance and coffee can investing very, very strongly. And just wanted to understand for someone like you who feels so strongly about it and feel that it's a very fundamental principle of investing. What are your red flags and even green flags for that matter?
So look, I think courtesy the efforts made by the regulator, courtesy the changes expedited by the Ministry of Corporate Affairs, the disclosure levels are significantly better today than they were a decade ago. You know, will you get a satyam from time to time? You will, and those are, you know, it's very difficult even for experienced fund managers to avoid every satyam that will happen in India in the years to come. But what you can certainly avoid is straightforward corporate governance blow-ups, which I think telegraphed well in advance, right? So I'll give you some examples. I think when DHFL went through its crisis in August, September 2018, a lot of people were, amazed. And I asked myself that do they not read the annual report? Because if you read the DHFL annual report, the conflicts of interest were pretty clearly highlighted. In a way, bizarrely, to give credit to DHFL, the annual report said, for example, that the promoter sits on the audit committee and the promoter is the chair of the audit committee. Right? I'm thinking back 20 years ago now, I remember Crompton Greaves had similar sorts of...
Is that even allowed?
So it's allowed. A promoter can sit on an audit committee, but as you're alluding to, when we see that, when we read the annual report and we see the promoter or a promoter family member sits on the audit committee, that's a red flag. And if the promoter is the chair of the audit committee, then obviously your brain should start thinking, ho kya raha hai yahan pe? Similarly, if in related party transactions, you can see that the promoter family's ghar ka rent is paid for by the company, then it's a red flag. Now, what the company will say is, nahi, zyada paisa nahi hai, 1 crore hi to de rahe hain, 2 crore de rahe hain. But our point will be, why is the listed entity, why are minority shareholders paying this promoter's ghar ka rent? Aur ghar ka rent de to pure sare employees ka bhi ghar ka rent de do na. Why just the promoters, right? So reading the annual report, seeing who the auditor is, seeing what the auditor's background is, that's also pretty easy to check, right? The name of the auditor is given in the annual report. Run a simple Google check and figure out which are the listed entities does the auditor audit. If the auditor audits a bunch of listed entities with a dubious reputation, you be wary of that. Related party transactions are another straightforward area to look at. If you a lot of people say, humko padhne ka time nahi milta, but you can open the PDF, the annual report in PDF form, and use the search engine in the PDF to say related party transactions, and it'll all come up, right? A third area that we look at is profit ka conversion to cash. So profit dikhana is not easy, but it's very doable if you want to fake things up. You basically fake the revenue, understate the cost a little bit, and show a profit. And if you want to show a trend in growing profit, that's reasonably simple to do. But it's harder to fake cash. Now Satyam did it, but it's generally harder to fake cash on a sustainable basis. So if the profit is not becoming cash on the cash flow statement on a reasonably steady basis, at least 70-80% profit cash nahi ban raha hai, so you should become a little wary. So the identity of the auditor, related party transactions, board में पूरे family से भरा हुआ है board, audit committee में कौन बैठा हुआ है. I think there's enough there in the annual report and it's freely available.
So like you said, 10 years back where we were, let's say on corporate governance as Indian corporation and today, do you see a dramatic shift, change, improvement that's happened?
So in sectors where the interface with the government or the licensing regime is low, I think things have improved materially. Right? Okay. In sectors where the interface with the authorities for various licenses and permits and so on is high, I think then the improvement has been pretty modest, perhaps at the margin. Right? Overall market has improved. So if you ask me a decade ago, I would have said 1 in 2 companies' accounts are smelly. I would say now that ratio is 2 in 5. So for 50% se 40% hua hai. But the disproportionately sharp improvement is in sectors where the government doesn't have that much to do. So for example, IT services. The government's role is modest. But on the other hand, sectors where there's heavy government interface, 50, 100, 200, 300, 400 licenses chahiye. Some industries in our country need 400 licenses to operate. You can imagine why the improvement has been far more modest.
But do you think because there are some industries that are far more tightly regulated than the other, right? Obviously, you would have seen, for example, banking is a very tightly regulated, financial services for that matter, is a very tightly regulated industry and segment, right? I'm sure you would see that tightly regulated businesses and sectors, you would see a far better corporate governance than...
because it runs both ways, right? So the more regulations you have, the more the scope for rent seeking. The more the scope for rent seeking, the greater the incentive for the promoter to do naughty things. So it cuts both ways. You would imagine on the face of it that if you had a highly regulated, tightly regulated...
Intuitively you would want to believe that
but it doesn't. If it doesn't quite work. If that was the case, we could have just regulated everything and cleaned up the world. But it doesn't work. Regulation cuts both ways. It's one of the most ferocious fights in economics. ज़्यादा regulation से चीज़ें बेहतर होती है या कम से बेहतर होती है. It's like a religious fight. It's been happening for the last 200 years. But
it's a very even debate though.
It's an even debate, and my reading in India is by and large, the more you regulate, the more mischief actually takes place.
That's a very, very interesting thought. Okay, so moving on to a few other things that I really enjoy from your writing is competitive advantage. And you give a lot of examples on how some businesses that have really built a very strong competitive advantage, which is not easy to replicate, gives them a long-term advantage in building shareholder value, in becoming better businesses compared to others, right? But let's say that was 10 to 15 years ago, right? Today, in 2024, when you talk about competitive advantage, it can be very short-lived. Thanks to digital technology, one can really replicate the competitive advantage the other builds, right? So it's easy to catch up. It's faster to catch up than probably it was 10 to 15 years ago, right? So is it still a very relevant principle for you to look at when picking your investments, or you think that is really not the case anymore?
So let's look at it at 2 levels. So the first level is competitive advantage comes in various flavors. So in my books I've said, broadly 4 heads hai. I call it the IBAS framework. It's from my guru, Sir John K. Innovation, brand, architecture, strategic assets. So the tech piece you mentioned, by and large falls under innovation, right? So if your firm or if Marcellus or IDFC came up with a new way of assessing stocks or assessing underwriting, then that would be technological innovation. And you're right to say, if Marcellus came up with a new fly trap for us identifying stocks, word would get out, our competitors would copy us, and that's fleeting advantage. So by and large, tech innovation wale competitive advantages tend to be fleeting, short-lived, 1-2 saal, right? And which is why the whole tech industry is such a fast-moving landscape. But at the other extreme, right, if you just skip from brand architecture to strategic assets, there are many strategic assets which are utterly and totally enduring, right? So Coke का secret formula जो है जिससे उनका कोक का सिरप बनता है, right? It's one of the most famous strategic assets. Whatever the recipe is, supposedly is in Atlanta and कोई vault में है, and उसके बदौलत a sugary drink becomes a company selling a sugary drink worth tens of billions of dollars, right? Closer home. Asian Paints' ability to deliver paint every 3-4 hours to 150,000 dealers. That means to 150,000 dealers, they're delivering 3 times a day. So, kariban 500,000 times they're delivering paint. It's such a formidable strategic advantage that no rival is able to actually make any money.
Nobody else is able to do that?
Nobody else is able to do it because you need enormous ability to figure out in 150,000 locations, अगले 3 घंटे में क्या paint बिकेगी, right? A smaller firm can figure out Bandra में क्या बिकेगी, maybe Bombay में क्या बिकेगी, maybe Western Maharashtra में क्या बिकेगी. But for one firm to figure out in 1.5 lakh locations, because remember different types of paint will sell in different places on different times. So in Asian Paints' case, their strategic asset is the whole data, tech, artifice, supply chain, which delivers paint every 3 hours. To 150,000 locations. Just to put it in context, Asian Paints is delivering paint 500,000 times a day. Unilever delivers to its distributors once every 10 days.
Wow.
Right? So innovation, brand, architecture, strategic assets, broadly speaking in descending order of muscle. Sabse fleeting comparative advantages tend to be around innovation, and the most muscular, the most enduring tend to be around strategic assets. Now, let me address it slightly more theoretically. Without comparative advantage, a company cannot make money. So by money, I mean not profit, but free cash flow. So simple तरीके से सोचें, for return on capital to be above cost of capital, which means cash flow बनना चाहिए. Return on capital above cost of capital is same as saying cash flow बनना चाहिए. For return on capital to be above cost of capital, you need a comparative advantage, right? Without comparative advantage, आपका return on capital, cost of capital same बैठेगा. There's no free cash flow. If you don't have free cash flow, you cannot invest in the future. The only way then you can invest in the future is आप नया पैसा raise करो. But आप नया पैसा raise करोगे तो shareholders को पैसा वापस कैसे दोगे बॉस अगर आप perpetually raise कर रहे हो. So every successful company has a comparative advantage. One of the beauties of our profession, one of the great joys of our profession is the most successful companies will not tell you their comparative advantage. They'll not tell you, they'll not tell me, और किसी को नहीं बोलेंगे. And it's almost like a puzzle to be solved. कि डिवीज लैब
play it off.
हाँ, so डिवीज लैब किस लिए पैसा बना रही है, मुरली डिवीज साहब या किरण डिवीज साहब किसी को नहीं बोलेंगे डिवीज लैब इतना पैसा क्यों बनाती है. So if a person is stupid enough to think यार डिवीज लैब की तो शायद competitive advantage है ही नहीं, and they don't invest in Divi's lab, I'm afraid they're not going to make too much money. Similarly, if you were to take a flight to Bangalore and meet the Titan team, they'll underplay everything.
Yeah.
And they'll say, यार बाकी लोग भी ज्वेलरी बेच रहे हैं, हम भी ज्वेलरी बेच रहे हैं, क्या comparative advantage है? And a lot of people say that. कौन सी बड़ी बात है, right? But Titan's comparative advantages around brand, around architecture, around strategic assets are formidable, which is why in the last 20 years, Titan's compounded 1000x, right? There are thousands of jewelry firms, लेकिन एक ही राजा और 1000 गुना compounding. So it's what separates the men from the boys, the women from the girls. But the beauty in this is the girls might talk louder than the women, but the women have the comparative advantage. The boys might yap louder than the men, but the men have the comparative advantage here.
And that's why I think we're calling it the art of investing, right?
Lovely, nicely put. And just to sort of take that analogy of art versus science further, I suspect AI is not going to be able to.
Oh.
You might not be able to open AI and say, AI, bata mere ko is company ki comparative advantage kya hai?
Has my question paper got leaked? Huh? He's answering questions before I ask them. Okay, so great, fantastic. I think that's a very nice perspective on comparative advantage. Coming back to the subject that you already touched upon, real estate. Right? One thing common between me and Saurabh is a love for real estate, right?
Absolutely. I own my flat, by the way. Disclaimer upfront. I own the flat I live in Bombay.
Yeah, I know that. No, on a serious note,
Haji.
Saurabh is definitely not a big fan of real estate. And in fact, in coffee can investing, you even mention, or is it in Diamonds in the Dust? You mentioned that real estate is a trap as far as investment is concerned, right?
That's right, yeah.
But you're talking to Indians, Saurabh, right? They love real estate.
Yep.
They're just obsessed with it. Love probably is an understatement. And, every HNI or every, probably not, why just an HNI? Everybody who invests would want to or love to have some portion of their assets in real estate. So why do you feel so differently and so strongly about real estate?
So I think there's a bunch of things which are happening, right, in the background, which we need to understand. So part of it is still a poor country, one of the 50 poorest nations in the world. And naturally, there's still a great deal of skepticism about the system, the authorities, the sarkar, right? And there's this fear कि ये stocks क्या है, ये तो demat account है, पता नहीं कब क्या हो जाएगा. So anything which is associated with financial assets still has a degree of skepticism associated with it, right? And real estate is a lion's share of that. Now, to my mind, it's a valid psychological issue that these investors have, but that means because of their psychological biases, their trauma, they're overweighting real estate. The returns from real estate are evident to see, right? It's no mystery that in a big Indian city, you'll compound at best at 7-8%, right? Yeah. If that. So it's not as if, you and I have to sort of do some deep research to figure out गुड़गांव में, नोएडा में, बॉम्बे में, साउथ बॉम्बे में क्या कंपाउंडिंग है रियल एस्टेट का. द आंसर इज वाइडली अवेलेबल. आई हैव साइटेड इट इन कॉफी कैन इन्वेस्टिंग एज वेल. 8% ही बनता है. नाउ दैट 8% क्यों बनता है? बिकॉज एवरीबडी एल्स is loaded up on real estate because of these background issues, right? There's also another driver, which is black money. A lot of people are able to earn black money in our country. They can't use the black money to load up on the stock market. So the black money goes and parks itself in real estate and artificially bumps up the price. So given that there are these two powerful drivers of real estate, which are irrational drivers, one is black money and the other is traumas and irrational phobia of the government. Someone who's a rational investor takes a reasonably balanced view of life, believes that you can't live life in a country and be scared about the government, should then steer clear of it. And the reason from a purely investing perspective I steer clear of it is the 8% return associated with poor liquidity. Right? The capital gains tax structure, I know the FM relaxed it somewhat, but even then it's a pretty unattractive CGT structure, and there are associated costs of dealing with brokers and buying and selling flats, which make it deeply unattractive, right? And there's a lovely RBI paper, I think it's called the Household Committee Survey. It was published in 2018. It's easily downloadable. Just Google RBI Household Finance Committee Survey. And you'll see there that 95% of Indian family wealth, the balance sheet, 95% is in real estate and gold. So that gives me great joy. Because that means
opportunities.
Abhi to shuru hai story, right? Now, all you and I have to do is figure out what is the size of the Indian household balance sheet. वो वाला data उस paper में नहीं है. Now, there's a famous economist called Thomas Piketty. तो Piketty साहब ने एक बहुत अच्छा रूल बनाया है जो मेरे ख्याल से वैलिड है. Piketty says a household in any country, the household balance sheet का size is 3 to 3.5 times national income. So if you assume national income in our country is 3.5-4 trillion, multiply that by 3, you get to 11-12 trillion dollars is India's household balance sheet. Now going back to the RBI paper, 95% is physical. That means you and I know that $10 trillion is is real estate assets and gold. And we know from SEBI and RBI data, barely a trillion and a half is financial. So 10-11 trillion physical में है, केवल 1.5 trillion financial में है. And that means you and I have a pretty good future ahead of us. We just have to keep our wits about ourselves and keep convincing households कि 10 से 11 trillion dollars आपके पास physical में है. उस पर कंपाउंडिंग खास आएगी नहीं above the rate of inflation. Even if they toggle just 1%, just imagine 1% of that pile coming in every year to financial assets, it's $100 billion inflow into financial assets. And if you add up in India, mutual fund plus insurance, it's actually that. So every year, Indian households are toggling 1% of their 10 trillion physical pile into financial. Now, if you do that over 10 years, $100 billion every year, 10 years means over the next decade itself, we'll have $1 trillion coming into the stock and the bond market. And that's what's so exciting about living in modern India.
What percentage of your wealth is in physical assets?
Just the property I
Just
live
the
in.
house
That's
that
it.
you
Yeah,
live in.
yeah.
Right? That's all.
That's it. Everything else is either Indian stocks or Western Hemisphere stocks.
Okay. So Saurabh, talking about physical assets, another physical asset, that you keep mentioning about is gold.
Mm-hmm.
Again, another asset class which Indians love. We Indians feel that it's a great hedge asset, and one needs to have it in their portfolio. Everybody seems to have some bit of gold in their portfolios. What's your take on gold? Is it part of your asset allocation in any portfolio? If yes, then why? If no, then why?
On a serious note, volatility gold price का stock market जितना ही है.
Correct.
Diversification actually है नहीं. Gold and equities in our country, gold and equities is positively correlated. And तीसरी चीज़, you're living in one of the world's best performing economies over the 10, 20, 30 years.
Yeah.
When you're living in the middle of such economic change and you're seeing the compounding, why do you want to go and bury your head in a physical asset class which cannot possibly compound? And as I said, there is a panacea. अगर आपको टेंशन होती है, रात को नींद नहीं आती कि मार्केट घुस जाएगी, सो आप डाइवर्सिफाई करो इंडिया और अमेरिका में, डाइवर्सिफाई ग्लोबली rather than diversifying into a low return physical asset class.
I want to ask you, what's your view on how AI is going to change the way people invest and the way people like you manage investments, right? How is that landscape going to get impacted by AI, if at all you think it is going to get impacted by AI?
AI will do is it will automate the routine, the mundane tasks. So for example, the whole issue around scraping data from the internet, from annual reports, building a financial model. So building a straightforward vanilla financial model, I genuinely think will become my saying into Python that I want the Divi's lab ka financial model. I don't think in the not too distant future, AI will build the financial model. So if what's routine becomes automated, it frees up time and effort for applying your dimag on the inside, whether it's in competitive advantage, whether it's in macroeconomic themes, that people will have more time to focus on thematic work. Now, जहाँ पे भी दिमाग का इस्तेमाल आ जाता है, routine gets taken out. Again, what you see is the men and the boys separate, the girls and the women separate. मेरे ख्याल से AI के बाद ये gap और खुल जाएगा.
Okay.
Because the routine tasks, right, which take up the so think of a really bright fund manager, उसके बेचारे का जिंदगी में routine करने में ही time निकल जा रहा है.
Correct.
Right? And whatever analysts he's employing, same पंगा for them. But AI will automate the routine, therefore free up time for the dimag wala piece, and therefore when everybody just has to do the dimag wala piece, जिनका दिमाग का voltage ज़्यादा है, they will run ahead of everybody else. So human ingenuity, human creativity will become even more valuable in the AI era.
Fantastic. That's a very nice way to put it, actually. Okay, so see, like me, a lot of people have read your books and appreciated and taken a lot of good insights
Thank you.
from the books. And you talk about all the things that are fundamentally, right when it comes to investing, long-term investing, corporate governance, some of competitive advantage, some of these things that we spoke about, right? Which of these principles of investing, like when we say investing is an art, which of these principles of the art do you think people find most difficult, to practice in real life?
So why don't I put the question on me and put the pressure on me on this? I think as we grow older, I think all of us do, and in my case as an investor, as I get older, I'm realizing that some of my own fundamental principles, as I get older, those fundamental principles have to be adapted. So for example, one of the principles I've always held is invest in franchises, whether it's a dominant franchise, pura bahubali prakar franchise, hai, tod-fod pricing par honi chahiye, etc., right? Now, as I get older, I realize that if I know that a said promoter has built 2 great franchises, right, and I know that the fellow's corporate governance is good, ईमानदार इंसान है, and उसने अब ये तीसरी franchise शुरू की है, rather than giving it 5 years for the franchise to prove itself, can I pull the trigger earlier, right? So just to sort of verbalize it further, at close quarters I saw Villayan Subbiah ji build Chola Mandalam, right? And we made money, lots of people made incredible money, and Villayan Subbiah turned Chola Mandalam from a regional financial company to a national powerhouse NBFC, right? अब जब वो ट्यूब इन्वेस्टमेंट्स में आए, right, I continued talking to him, and he broadly articulated to all of us investors what his aspirations for Tube were. So rather than waiting for Tube Clean Mobility to build the market leading EV firm in India, I said that given that we have seen Vellayan build out Chola, given that on the CG power investment he's been successful, let's move before Tube Clean Mobility becomes a dominant player. So Tube Clean Mobility barely has revenues, obviously doesn't have a profit, but we've invested in Tube investments, and courtesy that we've got a by default, by extension and exposure to Tube Clean Mobility. So I'm trying to learn myself as to how does one adapt and grow, given that as you get older, from your original founding principles, you're able to get some extra incremental insights. And I'm hoping that through our new book, Behold the Leviathan, through our webinars, through sessions like this, I'm able to tell others that bilkul have your siddhant, your mool siddhant, your core principles of investing, but also realize that as the world changes, you can build further on your foundations, and gradually you build your empire state building as well.
Any memorable, story that anybody's come and told you about their investing journey, thanks to some of the writings in your book, some of the insights that you've provided? Anything interesting, memorable that comes to your mind?
So I gave the Rob Kirby wala story, but let me also share another story, and I've told the gentleman behind the story how grateful I am to him. So this was I think it was 3 or 4 months before the May 2014 election, where Prime Minister Modi got elected as the PM. I remember all of us had gathered together. One of the business magazines had hosted 4 or 5 fund managers for a roundtable discussion. Election में क्या होगा, उसका क्या impact होगा, कैसे निवेश कर रहे हो, right? And I had just read the Rob Kirby paper. Amongst those fund managers invited was myself and Bharat Shah ji. And Bharat Shah ji was asked, आपको क्या लगता है, कैसे आप invest करते हो? So he spoke about 2 metrics. He said that, look, I measure the strength of comparative advantage through ROCE. And I measure the ability to translate comparative advantage into upside, into compounding through revenue growth. And when he said it right, and he explained it so beautifully, and I've told him how grateful I am, because he articulated it with such simplicity, I was immediately able to say that Rob Kirby says great companies identify करो और उसको लेके बैठ जाओ, और भरत शाह जी बोल रहे हैं कि ROC और revenue growth आपके simplest metrics हैं, which have a lot of value embedded inside. ROC के अंदर बहुत कुछ embedded है.
How to identify that?
How to identify, हाँ. So great companies with good ROC over long periods of time, I'll highly like to have good comparative advantage. So at that moment, sitting in the Taj, in front of those five fund managers, मेरे दिमाग में वो jigsaw जुड़ गया कि आप कॉफ़ी कैन इन्वेस्टिंग रॉब कर्बी से लेके भरत शाह जी से रोकी और रेवेन्यू ग्रोथ को लेके जोड़ के एक कॉन्सेप्ट बनाओ, एंड देन गोइंग बैक टू द ऑफिस एंड रनिंग द एक्सेल was actually reasonably easy. So very grateful to these giants, right? Los Angeles में Rob Kirby साहब, the great Rob Kirby, and in Mumbai our very own Bharat Shah ji. It's on their shoulders that we stand and we learn, and hopefully, living in this wonderful city, I'll get more opportunities to learn from other bright people.
That's I think wonderful way to put it. So before we sign off, Saurabh, we've got a few more questions for you, but these are not the elaborate ones. These are the
harder
quick, short,
rapid
fire ones, the harder ones, right? But I've knocked off
Haan ji.
all the trickier ones.
Thank you so much. Very kind.
I'm just being
I'll buy a cup of coffee after this.
So, are you ready?
Haan ji.
You want to put the seatbelts on?
Trying my best.
Okay. Who is author Saurabh Mukherjea's favorite author?
Amongst foreign writers, I love Cal Newport. I learned a lot from deep work. But I think amongst Indian authors, there's a lady called Snigdha Poonam. I think she wrote a wonderful book called Dreamers 7 or 8 years ago. I'm hoping Snigdha ji writes again. I think she's in London at the moment, and I'm hoping that she'll come up with a new book. I think she's extremely talented. And Dreamers by Snigdha Poonam is a non-fiction book, I think. I would strongly recommend people look it up and read it.
You read a lot, Saurabh?
A book a week.
So what is the best piece of advice, Saurabh, you've ever received, and from whom? And why do you think it was the best piece of advice?
So 12-13 साल पहले की बात है, मुंबई में कॉकटेल पार्टी था, किसी रूफ टॉप किसी जगह पे थी, and I just about published my first book, Gurus of Chaos, which had done reasonably well, and this promoter is a promoter, has become 10x richer in the last 10 years. He came up to me, we were having a drink, and he said, आप अच्छा लिखते हो, दूसरे लोग क्या बोले आप सुनो ही मत, जो आपको अच्छा लगे, whatever you like writing, you should write, right? And I dwelt on that advice for many years, and in the last few years I've started doing that. I now write what I like reading rather than worrying about what others will want to read. And more generally in life, I've tried to do that. I've realized that given how competitive, how tough business life and life generally is, right? Unless you do stuff that you genuinely enjoy, it's very difficult to excel. It's very difficult to enjoy these sort of the best years of our lives.
A very good piece of advice. One advice that you'd give your younger self, let's say 20 years back or 25 years back.
So if I had the benefit of this bit of advice, that one I just spoke about, if 22-year-old Saurabh Mukherjea had that advice, शायद जिंदगी में कुछ और हासिल कर पाता, शायद और ऊपर जा पाता.
So you are, let's say, headlining this episode of Art of Investing, right? Which means we really acknowledge you being a fantastic investor.
Very kind, sir. Very kind. Thank you.
But I'm sure you would have made bad investments in your life, right? What is the worst investment you've made, and why do you think it was the worst?
So 15 years ago, I bought an insurance policy which had investments embedded in it, and it gave a disastrously poor return. 5 years in, I had to redeem that investment.
Okay. How does Saurabh Mukherjea unwind after work?
Dire straits with single malt.
Wow, fantastic. If you weren't an author or an investment manager, any alternate profession that you think you would have done well?
I fancy myself as a good cricket coach.
Cricket coach?
Yeah, I'll be a good cricket coach,
so
I think.
You would have made more Dravids.
Hopefully, yeah.
The one skill that you do not possess at all, but you wish you had?
So, emotional intelligence.
Emotional intelligence? Really?
थोड़ी सी कमजोर है.
Your take on cryptocurrency, here to stay or a passing fad?
Bad idea. The quicker it goes away, the better it is.
Growth or value investing? What is your personal investing style?
Growth. Life is growth. Investing is growth.
Not value investing.
Value is in the eye of the beholder. Investing has to be focused on things which will change the world, which will make your life better, the world better.
Fantastic. Thank you, Saurabh. So that was Saurabh Mukherjea, unfiltered and candid as always. It was a great conversation. I got a lot of insights, and I'm sure you also enjoyed listening to him. You are watching the FIRSTALK podcast by IDFC First Private. Join us again next time for more such deep dives into the world of investing and wealth management. Until next time, this is your host, Vikas Sharma, signing off. Thank you.